Is the bottom close? It's more selling ahead. Let's ask Ed Yardeni. He's the president of Yardeni Research. It's good to see you once again. What do you make of this?
Thank you. Well, we're in a bear market, certainly, and in bear markets, it's hard to predict exactly where the bottoms are going to exist. In the past, we've always had the Fed could always wait for the Fed to finally lower interest rates, and that's not happening this time. It's quite the opposite. We're all worrying about how much the Fed is going to be raising rates. So I don't see that there's a lot of upside in the market other than trading rallies anytime soon for the foreseeable future. I think much is going to have to depend on when inflation actually shows definitive signs of peaking and when that allows the Fed to ease off a bit. And I think that could happen later this year. I think we'll see some improvement in the inflation measures, but that's still not around the corner.
I'll tell you what, Ed, frankly, you sound more sanguine than you have with me most recently, if not downright dour about where things are, given what happened today in this environment we're in.
Well, look, bear markets happen, and we're in a bear market. Some are longer than others, but they eventually end, and then they set you up with lots of buying opportunities. And I kind of look at the situation now, and I see that we're creating a tremendous opportunities in technology where things have really been hard hit, but also in financials. And by the way, energy has had a great run here, but those stocks are still relatively attractive here. Look, I think a lot of the problems have been with us all year, but we really got hit with a game changer with that CPI. The May CPI report just kind of changed everything. Suddenly the Fed talked about much more aggressive rate hiking, and that's really where the issue is. And if you look in that CPI, a lot of that is energy. And Scott, I was listening to the conversation. Everybody's talking about the Fed. We really should be talking about this cockamamie energy policy that's coming out of this administration, which has contributed to the high inflation in the energy sector, which is then creating a real nightmare for the Fed. I don't know that the Fed can do much to create more cheaper energy prices other than by causing a recession.
Let me ask you this, and then I got to run. I mean, if this is what happens when you do 75 basis points in what is still a reasonably strong economy, understand it may be weakening as we're having this conversation. What's going to happen the next time if Powell does 75 again when the economy is only likely to be incrementally, if nothing else, worse? The data we're already getting, Philly Fed today, no good. Housing data, no good. Retail recently, no good.
No good. Well, I think we have to appreciate the fact that Powell has proven himself to be quite a pivoter. And while he's recently pivoted from 50 basis points in this latest meeting to 75 basis points and then 75 basis points at the next meeting, we'll see how that goes. I mean, he could pivot and suddenly say the economy is looking a lot weaker, and maybe he goes back to 50 or even 25, as one of your panelists said before. So it's a fluid situation. What can I tell you, Scott?
Yeah, I hear you, and it's tough to make sense of. Your honesty is certainly welcome and refreshing. Ed, I appreciate it. I think everybody is in the same boat, and I know a lot of us watching and listening to people like you share it. We'll talk to you soon. That's Ed Yardeni.